Hello and welcome to the market update video with me, David Madden. It's been a pretty quiet day in terms of news flows today. Stock markets in Europe are broadly lower. It's a similar situation over in the US. It appears that traders are looking forward to tomorrow's all-important US CPI numbers as a source of volatility. As I mentioned, stock markets over in the US are a little lower. The ever so slight increase in US government bond yields has put a bit of pressure on US stocks, in particular the technology sector. So it's no surprise that the Nasdaq 100 is the underperformer of the US bunch. Even though we have seen an ever so slightly increase in the US 10-year yield, it's now ticked up to 2.79%. The US dollar is down again for its second day in a row. The greenback has managed to hand back most of the gains it racked up last Friday following the very impressive US non-farm payrolls report. As a result of the weakness in the dollar, we're seeing euro dollar higher and we're also seeing pound dollar higher. Oil continues to see volatility. A few hours ago it was in the red, it's now swung back to positive territory. In fact, WTI is trading north of the $90 mark, but keep in mind last Friday it dropped below $87, which was its lowest level in 6 months. Gold has been trending higher recently, largely down to the sharp slide seen in the US dollar. A few hours ago, gold is at its highest level in over 1 month, which really underlines how bullish the recent upward trend has been. While the metal continues to hold above these 3 simple moving averages, it's likely the more medium-term upward trend will continue. A further rally from here could see a target 1825, and a break beyond that could see a target 1839. If you take a look at the RSI, we can see it's moving higher. If it continues to move higher from here, it might move into overbought territory. Should that be the case, that could be an early warning sign that the recent upward move in price has become overstretched. If we do see the downside in gold, it might find support from this region here at 1764, and a break below that could see a target 1754. Turning our attention to gold, gold is at its highest level in over 1 month for a couple of reasons. Firstly, we're seeing a slide in the US dollar, which is supporting the metal, but what also is in play, the US government bond yields are relatively low. The US 10-year yield is below 2.8%, so in the grand scheme of things over the past couple of months, it's at a fairly low rate, and in turn the relatively low yields are also supporting the gold market.